This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Monday morning, the day after Diwali. But I just want to start once again by wishing all of you, whoever is watching us this morning, a very happy Diwali and, of course, a very auspicious, prosperous summer 2080 as well. I'm Prashant. With me, my colleagues Nigel and Mangalam. Morning, guys.
Good morning. You said whoever is watching. I'm sure a lot of people in the northern part of the country not watching, because what they do is they do the puja at 4 in the morning of Diwali. So probably immediately post puja they would have gone to sleep. As a result of which, earlier we would have the markets closed the next day.
Yeah.
Today the markets are open. The day after is a holiday, which is tomorrow.
It's a bit odd, but it is what it is. So
you try to get a cab this morning, you'll get a perfect understanding. No cabs on the road. I take a cab from the most busiest junction in Bandra. That's Mehboob Studio. There wasn't a single cab either there or even at Leelavati. So that's telling you.
I took one this morning and the person stopped midway because they didn't have enough gas, and they said, okay, enough, you all have to find another one. So yes, the city is on leave.
But I'm glad both of you are here. I mean, you made it.
We need to have enough gas to pull through the day. And then we're back into the pavilion for tomorrow. So that's the good news, guys.
1 day break, right? Which is great news. Well, let's just begin by telling our viewers what they need to know as we kickstart another sort of trading session, another week actually. I'll just start, basically rewind the clock and take you back to Friday, and then I'll kind of address what happened yesterday, because, I mean, we did react to Friday's session, but for those of you who are joining us and looking at, all of the action afresh, we had a very powerful move. NASDAQ went up 2% on Friday, and I would say, and venture to say, that it did not appear to have many fundamental underpinnings. NASDAQ's 2% move, the S&P was up about 1.6%. It was a broad-based move. So if it is not fundamentals, it's not data, it's not big earnings or anything of that sort, what seems to have played a role is, things like technicals, right? Sentiment, things like seasonality, which is the fact that the fourth quarter traditionally is very strong for global equities. So it's a mix of these things, and some of these things can be self-fulfilling prophecies. If you believe that, the end of the year you're going to get a rally and everybody kind of believes it, that's the definition of a self-fulfilling prophecy. Will we get it is the question, because in the US as well, there is a huge dispersion. The Russell actually is down for the year. The NASDAQ is up 25-30% as we kind of get into the fag end of the year. Now, global markets are waking up, and kind of some of them are waking up to the big news, which was Friday's news, which is Moody's US outlook downgrade from stable to negative. We'll talk more about this. This is, of course, at the incremental, at the margin, a bit of a negative. And more than anything else, it kind of once again shines a spotlight on what is basically eventually, ultimately going to be the unsustainable path for US debt. I mean, the printing which is going on in the US at a very, very unsustainable rate. It's nothing now, but it's one more item which I think builds up. So just a few other things which I think you need to watch out for. So we get the big data point this week out of the US, which is the CPI. Markets are very sanguine. Despite Powell saying that, we'll have to be cautious on inflation, etc. The playbook is still post-FOMC, and the FOMC was, dovish, and the commentary was dovish, and markets have made up their minds that we are done. The big hiking, 500 basis point hiking cycle is done, maybe higher for longer, but eventually the next move is not a hike but a cut. So CPI on Tuesday is important. We get a meeting between the top two leaders, President Biden and President Xi of China, and they meet on Wednesday. So much of the sort of talk around realignment of supply chains, realignment of friendships, etc., is based on the fact that the world, in a way, does not like China, right? Especially in the US, there is aversion to invest, put more money into things Chinese. Can that change at the margin? I think that's going to be the important thing to track. There is, of course, some source-based news flow around this in terms of what we can expect, but more on that. US government shutdown risks, The deadline is on Friday. Unlikely we actually will get a shutdown, but there will be headline risk around it. So this is a few things into the week. Now to circle back to what happened yesterday. The Nifty was up 0.5% in trade yesterday. We had a pretty good Muhurat session. So very, very solid session. We closed at the 50% retracement of the full fall from the all-time high to the low that we had 3 weeks back. That is at about 19,530. We got to close at 19,525. Pretty much the 50% retracement. So that's the first level. Then you get the 61.8% retracement, which is closer to about 19,700. The precise number is 19,693, which is the next resistance for the Nifty. Bank Nifty, we've been kind of waiting for the last many sessions for the Bank Nifty to close above the 40-day exponential. We got that with yesterday's bump. So that number is 43,874. We closed at almost 44,000 levels. The next level to watch is about 200 points above, which is 44,208 and then 44,704. These are again 50 and 61.8% retracements of the full fall. Small cap index, it continues to be in another orbit. It's been the fastest recovery. It's made a new high. It continues to make a new high. And yesterday we had a new closing high for the small cap index once again. This morning, I think the indication is that we get a bit of a flattish start and we'll pick up from there. But we already have, in a way, reacted in a milder way to Friday's very strong US market session. Guys.
Well, you spoke about the flattish start and the small cap index doing well. I'll talk about the cricket game that I was watching yesterday. In the second half in particular, watched it in passing.
Yeah.
Once we had Virat Kohli bowling, then we had Shubman Gill bowling. We also had Surya Kumar Yadav bowl as well. And Rohit Sharma to top things. What it told you was that Team India said that this was nice practice for us and business resumes on Wednesday. The same thing can be spoken about the market as well. Yesterday was a Muhurat session. We did extremely well.
Session.
Today, we just chill around because a lot of other indices, in Asia are shut as well. And then business resumes on Wednesday itself. So we watch the equity markets and the semi-finals, both of them on Wednesday. What's actually, however, happened over the last month or so is that while the US risk-on has resumed, we've seen money chase other emerging markets as well. Up until now, India was the only game in town where a lot of money was, chasing the Indian shores. China has been underperforming as compared to Nifty. But look at Brazil. Brazil is up 4% in the last 1 month. And we have Russian index as well, up around 1.5%. So that's one thing that we'll be talking about. You spoke about the way NASDAQ moved on Friday as well, right? In the last 1 month, the biggest gauge of the US markets seeing, a resumption of risk on is the way Bitcoin has moved. And you compare that with the way the US Wix has moved. So the US Wix is down 27%, whereas the Bitcoin is up 39% itself. And ahead of CPI data tomorrow, all eyes on the US macros, and they seem pretty stable. Not much change in terms of the US yield. The dollar index is close to around 1.5, just around that 1.5.6 mark. Crude oil hovering around that $80 per barrel mark. And here, back home, while the small cap index has done well, a large number of stocks will now be focusing or reacting to the second quarter numbers, the last leg of those earnings. And thereafter, the street will start building in positions post this festive season for state elections and also begin, reading into those tea leaves for the general elections as well. Though there is not much correlation between the state results and general elections, this will give you some sort of sentiment check on the ground as far as the political situation is concerned. The one thing that I'll be tracking out for, what the FIIs do in the cash market. Why? Because yes, there is strong domestic equity inflow. There is a lot of resilience from our own money. FIIs don't need to buy big. Even if they sell small, we move higher. I was just looking at some data. On November 3, the FIIs sold about 12.5 crores. The Nifty was up 100 points. They sold about 500 crores. Every time they sell less than 500-600 crores, the Nifty moves big. And on the other side, on November 9, the FIIs sold about 1,700 odd crores. The Nifty closed mildly in the red. So they don't need to buy much. Even if they sell a little less, we'll continue our up move forward. But like I said, for markets and cricket, business resumes Wednesday.
Well, what's the biggest skew this week, Prashant?
Tomorrow's holiday, Nigel.
What's the biggest skew this week?
India versus New Zealand. That's something
it.
I'll be watching out for.
When we come back next Monday morning, I'll tell you what.
We'll all be wearing our blue jerseys. Don't say much. Don't say much.
So quite excited about that as well. I'll try to figure out with, the boss whether or not I can sneak away to Wankhede this week. So we'll have to see how that goes. But clearly, very, very exciting times. But we need to talk about the markets, right? So let's talk about that. Today, I'll be interested to see how domestic participation is because a lot of people will be on leave, extended weekend as well, and the festivities continue. So that's one factor at play. Next up, you have the Nifty Financial Services Index that normally has its expiry on Tuesday. But Tuesday we're shut. Yippee. So we'll keep an eye out today because today the expiry does play out for the Nifty Financial Services Index. And you can count on the bulls, right? They made such good use of yesterday's Maura trading session, took the Nifty up, crossed that 19,500 odd mark on a closing basis. Last week, a couple of times you ended on 19,470, 19,480, and we pulled back from there. But yesterday, they made good use of that, hit a century in style, and we conquered that. Now, all eyes are on whether or not we can go to that 19,590. Importantly, the mid cap and the small cap index out there, the mood for various stocks is very, very good. So I think that party could continue even in today's trading session. How the FI is positioned? Well, 82% of their positions are on the short side. You have close to 18% on the long side. You'd like a net short market. And as we have been saying, and as I said at the start of the series as well, with the FI's net short, it hasn't been such a bad thing. And maybe it'll be a good thing yet again. So that's one factor at play. Two strikes I'm looking at, 19,400 put and 19,500 call. The 19,500 call, the premium was in that vicinity of around 80 to 90 rupees, or it appears there was writing out there. Will those call writers run for cover? So that's one factor you need to track. On the downside, the 19,400 put, well, big open interest built up out there, total open interest around 85 lakh shares out there, and the premium around 40 rupees, which brings us to the levels. Support zone near term, for today itself, 19,365 because of the writing at 19,400. And on the upside, because you saw mixed activity added on the 19,500 call, that 19,590, that becomes a bit of a resistance. On the Nifty Financial Services Index, well, you saw the 19,600 put out there. It saw a fair bit of open interest build up. The premium out there was around 30 to 40 rupees. So given that sort of, that sort of build up that we saw, 19,560 becomes important on the Nifty Financial Services Index. And the highest open interest is added around 19,800. So that's a bit of a resistance zone. I'm highlighting these numbers because that index plays the expiry today, and it has a bit of an overlap at times with the Nifty Bank. So when that moves, you sometimes see the Nifty Bank as well participate, which is obviously a large weight out there. The trend seems to be up. The 19,250, that's the level that was a resistance. Till we hold above that, you'll be betting on the Nifty going ahead and conquering that 20,000 mark yet again.
Well, line of sight to the 20,000 level as we discussed yesterday. So looks like it. Let's see the stars align and come together. Well, let's just get you some views as well. This is on equities. Rhythm Desai of Morgan Stanley says that with strong earnings, macro stability and domestic flows, it is hard to argue against India's investment case. That said, he adds, event-heavy calendar with potential binary outcomes sets the markets up for volatility after having been less volatile than ever. He says they're overweight financials, consumer discretionary, industrials and technology, and they're underweight on other sectors. He adds, while we are in a macro market in contrast to a stock pickers market, the macro trade could peak in 2024.
Right time now to get you some money market views as well. It would be interesting to see if there are a lot of volumes in the money markets as well. A lot of bank branches are shut, even though banks are trading or banks are open in the country. B. Prasanna of ICICI Bank says that the dollar rose after hawkish Fed's peak last week, but mixed signals coming in from the economic data managed to keep it in a tight range. He also adds that while crude corrected on demand-supply outlook and Asian currencies have recovered from lows, the rupee has underperformed due to FII outflows and oil companies' purchases as well. He expects the short-term pressure on the rupee to continue and expect the currency to trade in a range of 83.15 to 83.65, with the RBI smoothing the volatility.
Well, on bonds, we've got B. Prasanna who says that global yields retraced higher and are consolidating amidst mixed data print and hawkish rhetoric from Fed officials. He says crude prices continued softening amidst weak demand outlook and receding war premium back home. He goes on to say bonds continue to rally with receding fears of OMO sales in the near future as liquidity remained in deficit. He expects bonds to trade in a narrow range with a 10-year between 7.26 to 7.35%.
Well, we've got plenty of stocks to track for you. There were a lot of numbers over the weekend, but we have brought it down to around 10 top stocks that we're looking at. Coal India, Eicher Motors, Fortis Health and Sun TV. 4 of them are reacting to positive news flow. While on the flip side, you have ONGC, Biocon, SAIL, Tata Chemicals, Glenmark Pharma and LIC. They are stocks that you should be keeping on your radar and could be on the negative side.
Okay, well, let's welcome in our first guest on the program. Ed Yardeni is president at Yardeni Research. He's joining us right now to take some questions and run us through what he's making of things. Ed, great to have you with us here on the program. Appreciate your time here on CNBC-TV18. Let me begin by sort of putting to you, and asking you rather two things. One, we got a very strong rally in the US. The Nasdaq was up about 2%. And I was saying earlier that it didn't look like it had too many fundamental underpinnings. It looked a mix of technical, seasonality, et cetera, et cetera. Would you agree with it? That's one. And second is midweek, we get this meeting between President Biden and Xi. How important is it going to be? Go on.
Well, I mean, starting with the meeting, I think it's extremely important. And I think the fact that their meeting indicates that we're still able to talk to one another, hopefully bring some of the tensions that are occurring in Asia downwards, and also deal with some of the other geopolitical issues. So any lines of communication is a good thing. And I think the market will welcome that kind of conversation. With regards to the rally we've had, it's been really intense. It's the S&P 500 is up over 7% since late October. And I think the reason for that is investors have come around to believe, and I agree, that the Fed is done, that inflation is likely to continue to moderate, that the economy, which was very strong in the fourth quarter, is likely to cool down somewhat, but not go into a recession. And I think we found buyers for the bonds somewhere between 4.5% and 5%. I think as long as the bond yield stabilizes below 5%, and as long as oil prices don't keep taking a dive here, because that's an indication of what's going on in the global economy, I think the stock market can move higher. I'm still expecting 4,600 on the S&P 500 by year end, and I think next year will go even higher.
Right. Hi, Ed. Good morning, and thanks so much for joining in here. If the global markets are going to do well, what about an emerging market like India? We have obviously a couple of domestic factors like state elections that will play out. But in a good global market environment and with the bond yields as well as crude prices being well behaved, what are the chances we move higher and outperform from here?
Let's start with the global bad news. The bad news is China's economy is going to continue to be challenged by the bursting of their property bubble. Europe has some challenges. Europe is in a recession, a mild recession, in my opinion. The U.S. Growth rate is going to slow, but we're not going to go into recession. But the good news for emerging markets, particularly India, is that global interest rates may have less upward pressure now that the Fed is done, in my opinion. And indeed, the other big issue, of course, is oil prices. It was only a few weeks ago that everybody was fretting that the price of oil could go up to like $100 a barrel. And I think the markets has demonstrated that just the global economy isn't strong enough to handle that. And we may very well be in an environment where the price falls around $75, $85 a barrel. And so I think both of those developments are good for India and other emerging markets, as well as the dollar probably isn't going to continue to strengthen, but I don't think it's going to weaken a lot. But so there's three happy developments, I think, for emerging markets, broadly speaking, but specifically for India.
Well, we've been hearing so much happy Diwali, happy development sound better when they rhyme with happy Diwali as well. Ed, just wanted your thoughts on two things in particular. One, you said that the global market believes that the US is done raising rates. So the question now is, when do they take the first rate cut? How long is it going to be a pause mode before that first cut is happened? And secondly, what do you make of the geopolitical situation? Things haven't gotten better from the time we last spoke, but global commodity prices suggest that maybe it's localized and limited, so they're probably not as big a risk as they were earlier thought to be. Your thoughts on both these two things?
Well, I think with regards to the perceptions of interest rates and when they're going to go down, I'm in no rush to see interest rates decline. I think one of the things we're learning here is that the U.S. economy is able to handle 4.5% to 5% bonds. But that was where bond yields were before the great financial crisis, and for several years we had 4.5% to 5%. In the 2003, 4, 5, 6, 7, we had that kind of range, and the economy did fine, and the stock market did fine. So in some ways, we're back to the old normal. The abnormal was what we had between the great financial crisis and the great virus crisis. So I don't need the interest rates to go down for the stock market to go up. I think just having them stabilize is an important thing. The geopolitical issues are very disturbing, very unsettling. But so far, the war between Hamas and Israel seems to be staying localized. There's still some skirmishing up in the north with Hezbollah. And of course, there's still issues for the U.S. with Iranian surrogates attacking U.S. forces in Iraq and Syria. But so far, it looks as though nobody really wants to see this thing just blow out of proportion, and wants to keep it as localized as possible on all sides. And so that's a good development. Unfortunately, the world's kind of gotten used to the confrontation between Russia and the Ukraine, and so I don't know that has any macro significance. But you're right. You look at the commodity prices, and if that's all the news you got, it would be hard to imagine that there's this kind of geopolitical turmoil going on, given the weakness in commodity prices and the calm.
All right, Ed, we'll leave it there.
Thank you.
Yeah, I mean, the geopolitics of it is interesting, isn't it? But the hot wars that you described, Russia, Ukraine, Hamas, and Israel, and then there is the Cold War, which is, in a way, the new Cold War, China and US. And what happens with regards to that, middle of the week when the two presidents meet, I think that will be equally significant as well. Thanks very much, Ed. Great to have you with us, as always. We'll take a very quick break here. Our list of top stocks is lined up next with the research team. Stay with us.
Welcome back. You're watching us here on Bazaar Morning Call on CNBC TV18, the day after Diwali. Wishing you once again, you and your family members, a very happy Diwali. It's a day after the Muhurat session. We did extremely well. Global Q's doing well as well. The big question right now is, will there be enough participation this morning or not? Now, whether there are enough participants or not, the question is, there are a bunch of stocks that you need to watch and keep on your radar this morning as well. And this is the CNBC TV18 list of top stocks for the day. First up, we have ONGC. Sonal joins in. Oh, Sonal, how did the numbers look?
Well, good morning. The numbers were slightly lower than what the street was working with as far as ONGC is concerned. Revenues came in at 35,163 crore rupees, which compares with the poll of 36,766 crore rupees. EBITDA also around 1,000 crore rupees lower than the poll, and this also led to a lower operating profit margin at 52.2%. Profits also came in at 10,216 crore rupees. Now, miss was driven by lower realizations and lower output as well. Output declined on a quarter-on-quarter basis, both in the crude and the gas segment. If you look at the crude realizations, came in at $73.3 per barrel. They were hit by an $11 per barrel windfall tax this time around. So that is the impact, but still it is at average levels for the company. Now, Citi has raised the target price on ONGC to 230 rupees a share. They say miss was primarily on account of slightly lower crude and gas production and lower gas realizations as well for the company. However, CLSA says the declining production may be compensated with upcoming projects and KG basin output as well. That is the next thing to watch out for. But yes, overall, the numbers were a slight miss versus CNBC TV18 poll.
Okay, all right, Sonal, but we can't let you go at that. Tell us about Eicher Motors as well. The Royal Enfield is thumping ahead.
It is actually, even though I am not a buyer or at all interested in that. But Nigel, this was a good set from Eicher. If we look at the numbers, revenues were up 17%, EBITDA was up 32%, operating profit margins, they increased by 320 basis points, leading to a profit growth of 54%. The company says they have seen a market share gain in the domestic market. They have seen it rise to 8.2% versus 7.8% that they saw in FY23. This is 250cc and above. They are also gaining market share in 125cc and above market, and they also say Royal Enfield share of more than 125cc bikes, it has risen to 32%. Brokerages, they are very positive. Morgan Stanley has an equal weight rating, but the target price of 3,552. They say EBITDA ahead of estimates, driven largely by a gross margin expansion that the company has seen. Jefferies has a buy target with a buy call with a target price of 4,650 rupees a share. They say it was around 6 to 9% above their profit estimates, and EBITDA was above around 32 to 55%. So both of them very bullish on the stock.
Okay, Sonal, thanks very much for that. Well, let's move on to Biocon next, which also reported. Ekta's got details here. Ekta, morning.
Morning. Well, yes, for Biocon, it was a different set of numbers simply because they've integrated the Viatris business. But it came below what the street was anticipating. Revenue up 49%, street was anticipating a 57% growth. Margins 21.4%, street was anticipating a 22.7% growth. Profit around 274 crores, which was higher than what the street anticipated. Biosimilar business, revenue up 97%. Generics was a bit sluggish. It was up around 4% on a year-on-year basis. Difficult to say what exactly the stock would react as because it's the first quarter for Viatris integration. But net-net, we could probably expect the stock to be flattish, maybe with a little bit of a negative bias simply because of the miss versus the estimates and the generics business, which was a bit sluggish.
Okay, Ekta, thanks a lot for that. Well, I'm looking at SAIL. First look at the numbers, they look absolutely splendid. And things look very, very good. And the volume growth actually was very, very good. It came in at 13%, much better than what we were working with. Most on the street were at around 4.5 million tons odd. And, the number came at around 4.8 million tons. They've also outgrown the other competitors, whether it's Tata Steel India, JSW or JSPL. So very, very good volume growth. The problem is that the numbers look much better actually because there was a 1,700 crore number that was included in the revenues. That's on account of a rail price revision, which is attributed to FY22. So in that sense, it's a bit of a one-off, and most on the street are treating it as a one-off. So I've adjusted for this 1,750, and then the adjusted revenue looks better still, or more or less in line because of the volume growth. The EBITDA number is a little bit lower, and the margins as well are a little bit lower. So I adjusted for that, 1,750. Some sell side on the street, they are arguing that maybe, it's part of operations itself, but we have adjusted for that. The positive, though, is that they've reduced debt by nearly around 4,000 crores on a sequential basis. There was some inventory build-up, which they're likely to have liquidated. And the outlook from here on is going to be interesting because Coal India, because SAIL reacts most to coal price movement, and coal prices from the average of Q2 have spiked up yet again. So we'll have to see how they do that. But for the time being, the adjusted number is a bit of a miss.
All right, the adjusted number is a bit of a miss, but we go back to Ekta. Ekta, hospital companies have reported good numbers by and large, as have diagnostic companies. Fortis has both. How did those numbers look?
Well, the hospital business stood out for Fortis, and that's the reason I expect the stock to be in the green. Revenue up around 10%, margins 19% maintained on a year-on-year basis. And the profit was lower, but nonetheless, the hospital revenue and the performance actually made up for it. So the hospital Q2 revenue was up 12% year-on-year. Occupancy 68.7 versus 63.7% on a Q-on-Q basis. Average revenue per occupied bed was up around 12% year-on-year. Diagnostic business was a bit sluggish. The gross revenue was 360 crores versus 351 crores year-on-year. But again, the hospital business statistics and the internals should probably aid the stock in today's trading session.
All right. In fact, we will be speaking with the management of Fortis on their earnings at 9:30 a.m. So you do have to stay in for that. Stay tuned. But Ekta, you are tracking Glenmark as well.
Well, yes, I expect that stock to be in the red. They've restated their numbers to adjust for Glenmark Life Sciences. Hence, year-on-year comparison is not possible. There was an exceptional loss also of around 68 odd crores, which included $30 million towards the settlement of a price-fixing allegation in the US with regards to a particular drug. Revenue was up around 6 odd %, margins 14% versus 16% year-on-year, and a loss of 81.9 crores. India was sluggish. It was up only around 3% year-on-year. North America was down 2%. But other geographies such as Europe was up smartly. But nonetheless, the fact that India, North America was a bit sluggish, margins were lower, there was a loss this quarter, should be on Glenmark, and I expect the stock to be in the red.
Okay, thanks a lot for that. Well, I'm looking at Coal India, and those numbers look very, very good, any which ways you look at it. So we already have the volume numbers in there. But the sales number came in much better. That's the revenue number. EBITDA number was better and profit number as well. So all those three are the basic numbers. Since we already have volume, the beat had to come on the realizations. And the decline on a year-on-year basis was only around 3%. The street was working with a number of around 5 to around 6%. The key reason for the beat was the FSA realizations, actually. They surprised, positively. And on a year-on-year basis, it was up by close to around 9%. Most on the street were at that vicinity of early 1500s odd. It came in at around 1542 odd, which the street likes. So the FSC realizations were better. The e-auction realizations, well, they were par for the course. They had come down in the proportion that was expected, came in at around 2,800 to 2,900 rupees odd. And the volume numbers in the split as well was more or less in line. The sweetener came in the dividend, and they've declared close to around 15 rupees odd. So all in all, these numbers look good. And valuation-wise as well, it never trades at elevated multiples. So expect the stock to continue in its good form.
All right. We go back to Sonal now. Sonal, Tata Chemicals, that's another stock that you're watching.
Yes, it was a weak set, a top-down miss. If you look at the revenues, down 6%, leading to an EBITDA fall of 11% to come in at 819 crore rupees. Profits also, if you look at the operating profit margins, that is, it came in at 20.5% versus 21.7%, leading to a profit decline of 27%. If we look at what the company said, they said the demand is stable. It was a pricing pressure that led to the fall that we saw in the numbers this time. India, in fact, saw more imports of soda ash this time around. It was around 14% earlier. It has risen to 27 to 28% now, leading to the pricing pressure and higher dumping that the company and the market generally is seeing. On the back of this, Nirmal Bang has cut their FY24 and FY25 estimates by 38 and 34% for the next 2 financial years. They have downgraded the stock to a sell. Expect the stock to be under pressure today.
Okay, well, Sonal, thanks very much for that. LIC is the next one. We're going to focus on the second quarter there. Upasana's got details here. Upasana.
Well, VNB margins were down about 10% and stood at around 3,300 crore, and VNB margins were flat on a half-yearly basis at 14.6%. Now, talking about the total EP, it was also down about 10% and stood at 22,627 crores. And talking about the overall product mix on an APE basis, the share of non-par has increased from 8.99 to 10.76%. Now, talking about the Par mix in terms of AP, it stood at almost about 89.24%. Now coming towards the solvency ratio, it stood at 1.9 times versus 1.88 times, and expense ratio of the company has improved on a half-yearly basis from 16.69% to 15.14%. So all in all, we are seeing a flat VNB growth on a half-yearly basis, even though the share of non-par has increased from 8.99 to almost 10.76%.
All right, Upasana, thanks a lot for that. The stock that I'm watching this morning is Sun TV. They reported their numbers on Friday. And if you just take a look at the revenues, it was a 27% jump that we saw in the company's overall revenues. However, the ad revenue was down 4%, subscription revenue was up 5%. What is it that then led to the revenues move 27% higher? It was the release of the Rajnikant film Jailer, which actually did well for them and contributed to our overall revenues. The EBITDA of the company was higher as well, and as were the margins, closer to 70%. Sun TV has had the best margins in the industry as well. The profits, however, did not grow as much as the revenue and the EBITDA because there was a large component of depreciation. The company usually depreciates the entire asset in that quarter itself. This quarter, the asset being Jailer. However, you expect the stock to be in the green today, despite that one-off revenue coming in from Jailer, is because of two things. One, the street expects ad revenues to resume in the second half post the World Cup as, companies redirect their ads into other channels as well. The second thing that we'll be watching out for is the cushion that they have in terms of valuation for the IPL, which is about 7,000 odd crores, and the cash on their books of close to 4,500 crores. These two account for nearly 50% of their market cap, limiting the downside on Sun TV. The stock has done well. If they're investing not much in Sun Next, it helps their return ratios as well, as a result of which, see some green on that counter.
Okay, all right. Thanks a lot for that. Well, let's run you through and do a quick recap of all the top stocks that we discussed. Stocks with positive news flow. 4 of them: Coal India, Eicher Motors, Fortis Health, as well as Sun TV. While stocks with negative news flow, they should come up for you on the screen. You have ONGC that's in there. You have Biocon, SAIL, Tata Chemicals, Glenmark Pharma, and LIC.
Okay, we'll take a very quick commercial break here. Prakash Devan will be joining in for some fundamental stock check, and we'll also a little later after that be connected with the management of eClerx to discuss their second quarter earnings. Stay with us.
Welcome back. Well, we've got plenty of stock to discuss, and let's get straight to some fundamental analysis. And to do that, we're joined by Prakash Diwan, who's joining to help us out. Hi, Prakash. Good morning. Happy Diwali to you, and hope you had a good one yesterday, and maybe it's going to be a better one today. But let's talk about a couple of stocks then. And I want to start with my favorite, not from the stock market perspective, but I'm a user, right? Eicher Motors. The numbers look very, very good. And they're talking about a new launch, which I'm waiting by for that launch because the pricing is going to be very, very crucial. 450cc, the bike is looking very good. Pricing is going to be crucial. But your view on the stock from here on, just a couple of months ago, everyone was fretting about new bikes coming in there. But it seems that Thump wants to thump ahead.
No, absolutely, Nigel. Thanks so much for the best wishes of the season. And it's good to see an all-boys team hold fort today. The simple thing with Eicher that's happening now is that they've kind of figured out the perfect price points to be at. Okay, look at how they've managed to launch even a low-priced bike as compared to their mainstream product line and still do so well on that. So if they were to launch another bike that also kind of fills in some of the gaps that have been created because they've not been so aggressive in launching as much as some of the foreign collaborated businesses have, whether it's Bajaj or Hero, you will start seeing that the after-sales service and distribution network is kind of far more robust. And that's exactly why people still end up wanting to go for an Eicher product rather than any of the other ones. So I think it's more to do with the right spots that they've picked up, and the margin improvement of 2% is clearly an indication that they've managed a lot of efficiency in the entire value chain. So I think if the launch is priced well and it fills in some of the gaps that I was talking about, you will see them being able to greatly improve their volumes also. So that's where it will kind of start getting operating leverage to kick in, which has already happened in the last couple of quarters. We've seen the beginning of that trend. That will probably get deep-setted. So I think 1,000 crores of a run rate on PAT is very, very commendable, and that also justifies the premium valuation they would get vis-a-vis, let's say, a Bajaj or something. So quite positive on that, and then we'll look forward to the launch as well.
Okay, looking forward to the launch. The only thing I'll do is probably when Nigel gets his 450cc bike, I'll probably ask him to ride me around, and that's all the bike.
Better hold on tight.
Well, we'll see how that goes about. But, let's talk about the media space itself. We also had Sun TV's numbers come in, 27% jump in the revenue, of course, aided partly by Jailer. How do you view this stock now? 50% of the market cap is either in cash or the value in IPL. No word on IPL value unlocking yet. And then you have the Zee-Sony impending merger. How do you view this space, and what would you bet on?
So, Magnum, interesting that while the Zee-Sony merger has kind of made the other part of the large competition blink, they've managed to at least be able to get this thing. There's been not great ad revenue growth as I can see. I think that's because of a basic slowdown in the ability to, push prices higher. And most of the slots which would have actually got their better realizations, better accrual will probably be in the current quarter, right? So, thanks to all the matches that you are seeing. But the IPL and that 4,800 crores cash valuation that they always have been sitting on is what gives you that comfort. So if they are able to do a bit better on subscription and, the overall industry revenues grow, I think they'll probably start doing well. And you've seen that in some of the other plays like Network 18 and all, where you've seen some sort of a comeback in demand. Now, ad space competes with a lot of the other, all of these channels will actually compete with a lot of the OTT play as well. And fortunately, that's no more a drag for them. The investments that they were making were actually not yielding so much because the cycle is fair longer, and they were probably late in that game. So I think it's going to be a fairly strong performance going forward. They've learned from the mistakes of the past, unless they do something which is the misallocation of capital, and that the street has always been worried about that. So if that happens, then it's different. But I think the stock also has done so well in anticipation of what's happened. But these numbers could continue, is my sense. And then you probably see, if you buy it closer to 600 instead of the current market price, you'll probably have a better risk reward than what it stands today.
All right. Prakash, stay with us. We'll come back to you for more later. But we have the first corporate management with us to talk about their earnings. E-clerks is what we're talking about. They reported a decent set for the second quarter. Revenue growth has come back and EBITDA margins have also expanded. We've got the management joining in to take some questions. Mr. Srinivasan Nadukar is CFO at the company. He's joining us now. Mr. Srinivasan, good to have you with us here. Thank you very much. And, festive greetings. Happy Diwali to you and to your organization, your family. Prashant, this side. Sir, and the numbers look pretty good as well. Revenue growth has come back smartly for you, almost 4.5% on a quarter-on-quarter basis. You indicated some of this when you spoke during the first quarter conference call, but it seems you've bettered what you yourself said you would. So the question is this sustainable? What's the sense?
Thank you, and happy Diwali to all of you. Thank you for having me on the show. When we spoke in the last quarter, I guess we thought we would make up for the decline in Q1. But as you correctly point out, we've done much better, right? We've done about 4.5% in US dollar terms and about 6.5% in INR terms. We think that there are a couple of reasons for this. One is that of our three businesses, we saw growth in two of those three businesses, financial markets and customer operations. Onshore growth in the first one, offshore in the second. And that has helped. We think that Q3 will continue to be positive for us. So hopefully this momentum should continue.
All right. Hi, Srinivasan. Good morning and good to have you, Ben. I recall when we chatted last, we were talking about this margin band of from 28 to around 32%. And I think you were leaning more to the lower end. I believe now you're sounding more optimistic. You want to revise it to the upper end or closer to the upper end of this range?
So I think when we spoke last time, we were in fact saying that we would be at below the lower end of the 28 to 32. So we were expecting it to be slightly lesser than 28. And now that the Q2 margins have come out so strongly, I think we want to say that we will be in this range, 28 to 32 range. So we're not going to fall below that range. And let's see how things play out. But that's what we think will happen at the moment, given the numbers that we have.
Okay. And what stands out is that you're among the few companies where both headcount has increased, as has attrition. The other companies, we saw flattish sort of headcounts with stabilizing attrition. What explains that, and what's your outlook on wage hikes, costs, etc.?
So for us, headcount has increased because of, as I mentioned, offshore. There was growth, and we expect some more growth in Q3. That's why the headcount has increased by about 600 people on the operations side, and that has also helped us improve margins because that headcount addition has happened at the bottom of the pyramid. Attrition has gone up slightly, but if you look at our history, usually Q2 is the highest attrition quarter for us because we've paid out increments and wage hikes in Q1, and people usually, those who are not happy with it, they generally look out and attrition peaks in Q2. However, it is still much lower than what we usually see. So if you look at last year's, for example, it would have been mid-30s. This quarter, it's about mid-20s. So we're still okay as far as attrition is concerned.
Okay, all right. And, I'm just looking at the kind of rate that you've been growing at. By the first half, towards the end of the first half of next year, you'll be at 100 million on a quarterly basis. You've come a long way from the early 70s. Now you're in the late 80s. Mathematically, at some point of FY25, you should be at 100 million, right? Could it be
yes.
towards the end of the first half?
Hard to say, but hopefully it will happen sooner rather than later.
But FY25, it's on.
Yeah, should be on.
Right. And, this is a question that everyone wants to know. What is the kind of deal pipeline that you have for you to get to that $100 million per quarter sort of revenue run rate? What are you anticipating? And generative AI, I mean, how much does that contribute to your revenue productivity? What have you done so far in terms of, the products that you've lined out?
On Gen AI, I'll take that question first. So we are doing a lot of POCs with our clients. generally our revenue from some of these POCs have moved into production stage, but the revenue for us is still small. And we think that any meaningful impact of GenAI on the negative side, as far as reduction of headcount or large scale automation of work is concerned, is a little more in the medium or long term. So at the moment, we are doing a lot of POCs. We are working with our clients to figure out what works for them, how we can implement it. But we don't see significant cannibalization of revenue because of that. On the deal pipeline, I think it's about the same as last quarter. However, on the discretionary side, there continues to be caution. The third vertical, digital, does seem to have some bit of pressure. So I would say, as far as cost takeout is concerned, we are seeing good flow of deal, and that's been reflected in the revenue as well. But on the discretionary side, the spending still continues to be slow.
Okay, Srinivasan, great to have you with us here. Thank you very much for your time, and hope to speak with you again soon. Thank you.
Thank you.
That's eClerx with an outlook looking positive. Now, Anuj is here with a quick setup on a look at the trade setup. Anuj, hi, good morning, and happy Diwali.
Morning, Prashant, Nigel, Mangalam. Happy Diwali to you and to all our viewers. The Samvad is starting on big hopes, of course. The Nifty is now just 3.5% away from an all-time high. And tell you what, the broader markets are almost already there. The mid-cap index is just 1.7% away from all-time high. And yesterday, the small-cap index actually hit a fresh all-time high. And small-cap index is up 34% this year. And a lot of money is chasing small caps. Now, you know, the consensus is that large caps will play catch-up. When there's consensus, market sometime normally tend to move against that. So it's possible that the mid caps and small caps may keep outperforming, even though there's a lot of caution. But retail is driving this move, and that may continue even in this Samvat as well. It may get a bit volatile, but may keep outperforming. Now, looking at the Nifty, the outlook today, the first support is at 19,510, which was the Muhurat day low, but the bigger support is 19,425, which is Friday close. And I'm watching out for resistance on the upside at 19,555 first, the options-based resistance, and then chartically 19,624. But, you know, it's looking like a move towards 19,800 may have started with that Muhurat move. On the Bank Nifty, which has started to show signs of ending the underperformance, the first support here is 43,916, the Muhurat day low, and the bigger support is 43,505. The story here is that it's successfully defended the 200-day moving average. On the upside, the first resistance comes in at 44,130, and the bigger resistance comes in at 44,500.
Okay, all right, Anuj, thanks a lot for that. For the time being, though, we'll have to slip into a short break. When you come back, Mitesh as well as Prakash will be joining in to give us how they're rating trade setup and fill us in with a couple of picks as well. You don't want to miss this.
Okay, welcome back. We've got the pre-open session kicking off in about exactly 5 minutes from now. Mitesh and Prakash are with us with a quick check on things and how they're looking. Gentlemen, good morning. Great to have both of you here. Wishing you guys a very happy Diwali. I hope you had a wonderful celebration of the Festival of Lights. And of course, hope you'll enjoy the holiday which is in front of us as well. But let's just talk markets for a bit. Mitesh, how are things looking? We had a 0.5% gain on the Nifty. The small caps continue to power ahead. Is the setup positive? Do we have a line of sight to the previous all-time high?
Morning, Prashant. The previous all-time high might be a bit stretched given the fact that we haven't got a strong reversal or the reversal on the medium to longer term charts. So I am not yet, targeting that. But the short-term setup remains very positive, and therefore the momentum should be on the upside. One, getting past 19,450 is a plus, and now I think we can look at targets of 19,670, and in a good case scenario, 19,850. I expect that will be a very strong supply level. So beyond that, I'm not really considering a scenario about 19,850 for the time being. Similarly, on the Bank Nifty, the corresponding levels are 44,200, which is the first trading target, but it can even stretch to 44,600.
Season's greetings. Prakash is also with us. Prakash, your thoughts on the indices? How do you play them?
Yeah, good morning to you and happy Diwali to you as well. And I would say that Nifty looks good to me. Only thing is we had a short session yesterday with a gap up. So perhaps there could be some sideways move or a dip. If that happens, it's still good. And I would say as long as it stays over 19,500 Nifty, I think upside is on. Where does it go? It can go up to maybe around, I wouldn't say the levels here, maybe 600 to 19,700 in a days to come. Bank Nifty, again, the similar view. Strong support, Bank Nifty is somewhere closer to around 43,800. If it comes there, it's buyable. So dips are buyable in the early morning stages, not in the later stages. So any dips we get, I think is buyable. The next technical targets are correct around 44,000 plus zones. So I think the market is up, Nifty and Bank Nifty. Only thing is dips are buyable in the early morning stages.
Okay, gentlemen, we want to hear about your picks as well. But for the time being, we'll slip in a short break. You come back, we'll get pre-opening. We'll also line up the management of Hindalco to discuss the past quarter numbers that looked quite good.
Welcome back. You're watching us here on Bazaar Morning Call on CNBC-TV18. It's 9:01 and the pre-open rates are in. They're actually all over the place with a cut of almost 100 points for the Nifty, 100 points for the sensex as well. There is a big divergence out there. We'll let those rates settle. But a couple of things that really stand out. Coal India is doing well in pre-open. IOC is the other one which is doing well. Sun TV is a stock which is doing well as well. We did see a big jump in their revenues as well as the EBITDA performance out there. Coal India up 1.5%, Sun TV up 2%. We still have Mitesh Thakkar and Prakash Gaba with us. Mitesh, Prakash, you did speak about your index, view. Individual stocks. Mitesh, you go first.
Yeah. Morning. I have all 4 buy calls today. Ashok Leyland has come on the buy list after a long time. It seems to have completed a correction. Now can be bought with a stop below 174 for a first target of 181 on the upside. The other one is Gas Authority or GAIL India. That's a buy with a stop at 123 for a target of around 133. Also buy on HDFC Bank. Again, a stock which has come on the list after a long time. Seems to be giving some reversal on the intraday chart. So buy here with a stop at 1485. Look for targets of around 1530. And Cummins India is a buy with a stop at 1750 or just below it, and a target of 1840 can be looked at.
Okay, all right. Thanks for that, Mitesh. Prakash, what about you?
Yeah, I'll go with 4 stocks. 2 have strength and 2 resilient stock. 2 strong strength is Divi's Lab. I think it's shown some kind of a sideways move with some kind of an upward bias, trading at 3515, would have a stop below 3475. Possible target on the upside would be 3,600, Divi's Lab. Second stock that I like is Godrej Properties. Seen a good strength up there, kind of a pause mode. Strong support around the 1805 zones, have a stop below 1805, and possibly a target around 1900 plus zones. So Godrej Properties also look good to me. And two stocks, resilient stocks, I think Tata Chemical certainly is resilient. It refuses to go down. Traditional support exists there. I would have a stop below 958. Possible target of first technical target of 980 on Tata Chemical should be fine. And finally, TCS. That looks good. Again, a resilient stock refuses to come down, trading at around 3,358. Have a stop below 3,340. Possible target on the upside, 3,380. Yes, TCS.
Okay, all right. Thanks for that, gentlemen. Well, let's move on then, and let's speak to a company that came out with a set of numbers in the second half on Friday. Seems like a long time ago. But Hindalco, they reported a solid set of numbers. Revenues, EBITDA, both of them came in better. The margins as well expanded. But the aluminium business, well, did better actually than what the street was working with. To discuss about the past quarter and the way ahead as well, Mr. Satish Pai, the MD of Hindalco, joins us to tell us more about that. Hi, Mr. Pai. Always good seeing you, and thanks so much for joining in. Well, let's start off with the aluminium business. The upstream EBITDA is phenomenal. What's the outlook out there? And what's the outlook on pricing on aluminium itself? Because it's been in a bit of a range, as you told us the last time around. So EBITDA per ton for aluminium and price outlook as well.
I think let's start with the LME price outlook. If you remember, I have been fairly consistently saying that LME is going to be near about this 2200s till the macroeconomic environment gets clearer, people get more comfortable with the US economy, interest rates, Chinese demand, etc. So happy to say that most of it seems to be more on a positive trend. People talk about more of a soft landing scenario now. But still, you know, a second war opening up in the Middle East. So the overall macro sentiments remain a little bit, people are worried about the risks there. So, which is why commodity prices, even oil, which you would have expected to go up, has been sort of trending downwards. So LME supply demand is very tight. LME today is around 2230, 2220 types. So I think it's going to be in this range till clarity is there on the macroeconomic environment. Now, coming to our aluminium performance in Q2, we did very well, $750 per ton EBITDA. This is largely because coal prices went down about 15% from the previous quarter. I think in Q3, as you said, coal prices have started to firm up a bit. So we are now guiding flat, that our cost of production will be flat versus Q2. So you should see this, the current EBITDA per ton level continuing into Q3 as well.
All right, the current EBITDA per ton continues into Q3. Let's talk about the copper business, Mr. Pai, then. That's surprised positively yet again. I remember the last time you said that it can get better to around 600 crores, and it's more than that now in this quarter. Do you expect these levels to hold in that business?
I would guide that, you know, we had a very good quarter with sales and prices and mix being perfect. I think we'll be in that 550 to 600 range going forward.
Got it. So that's on copper. Now, Novelis business, well, it turned around actually sooner than expected. You briefly said you'll do $500 per ton in Q4, but you did it even earlier than that. Now you're guiding for around $450 to $500 per ton. What's the odds that you maintain it at around $500 per ton and maintain it here?
No, actually what happens in Q3 is that it's the annual shutdown period. So most of the large mills take the shutdown over Christmas and New Year, which is why the Novelis people have guided that 450 to 500. So I think that Q3 will be slightly down versus Q2 because of the shutdowns, but Q4 will bounce back very strongly. And we are very confidently guiding the EBITDA per ton to be $525 a ton, and the EBITDAs to be about 500 million in Q4. Q3 will be a slight dip because of the holiday season and the shutdown maintenance plan.
Okay, all right, Mr. Pai, what about the net debt number? You've undertaken various capex, but your debt has marginally come down on a sequential basis. So my question to you is, where's this debt number headed? And what's the update on the capex front as well? How does it look like?
So look, the net debt to EBITDA, you have to compare two now. Novelis is running about 2.7, and you will see that. I think that's about the highest you will see it. And as the EBITDA goes up, that net debt to EBITDA should be around the 2.5. The India business is running at some 0.13. I mean, we have about 1,000 crores net debt, and we are generating a lot of cash. And if you notice, we have prepaid 2,200 crores of debt this last quarter as well. So I think that, we'll be spending about 4,500 crores of capex. And you should see the India net debt levels be at this level. They're not going to go up.
Net debt not going to go up. But Ms. Pai, on Hindustan Copper, has there been any communication from the government?
No, we also wait to see what their plans are. No, we have not heard anything about Hindustan Copper.
But about Hindustan Copper, but Mr. Anil Agarwal as well seems to be in a bit of an interesting situation, and the hope is maybe, in fact, he could be looking at selling the Tuticorin smelter as well, if it opens up. If he's looking to sell, will Hindalco be interested in this one?
I think that, it's better to say that when the opportunity actually comes, we'll evaluate it.
Okay, all right. That's an open-ended answer. Thank you very much for joining us, Mr. Pai. I appreciate you joining in with that commentary on the business. Well, it's 9:10, so let's get the calls out of the way. Sudarshan is back. Sudarshan is with us. Sudarshan, hi, morning. What do you have? Sorry, Prakash, what do you have? Beg your pardon. Prakash, are you there?
Okay, all right.
Okay, I think having some issue, but Mitesh should be with us. Mitesh, your 9:10 call?
I'll go with the buy on Ashok Leyland. Keep a stop below 174 and look for a target of around 181. Okay.
Mitesh, just one more name. BSC had a bit of a whiplash up and down and back up again. How is that one looking? I think ended 5-6% high yesterday as well.
It's had a run from 500 odd levels to 2100 non-stop, and that's about 4x in the last 7-8 months. So very stretched, though there's no sign of a weakness as of yet. I think, a fresh entry should only happen after a consolidation and not in this kind of a run-up. So for me, I think a decline to about 1800, if it happens, 1800, 1850 zones would be a welcome entry point. Otherwise, I'll just keep trading the stop losses, and the current level would be closer to about 1955.
All right, Mitesh, we'll leave it there. Thank you very much, and we'll have you back again soon. Thank you for joining us for now. Tata Chemicals is the next one in focus. Now, soda ash imports are not just coming in from China, but other regions, other parts of the world as well. And that's what Tata Chemicals seems to be saying. Sonal, take it away.
Oh yes, so numbers were disappointing definitely, but even their commentary was not very inspiring. First, taking you through the numbers, revenues were down 5.5%, EBITDA down 11% in quarter 2, leading to a margin decline of around 150 basis points and net profit down 27%. We've been talking about price cuts globally and in India as well, and that is what has impacted the company's margins this time. They say that yes, volumes are intact or demand is stable, but pricing pressure continues for the soda ash market. They say India saw more imports of soda ash in this quarter. In fact, soda ash imports are around 27 to 28% versus 14% earlier. So there's doubling of soda ash imports that we are seeing in the markets. And it's not only China which is dumping a lot of soda ash in the country. Now, major of them is coming in from Turkey as well, because their core market in southern Europe has seen a decline in demand. So Turkey is looking at other geographies where demand is higher, the likes of India, to dump their products. So that's a new development that Tata Chemicals spoke about as well. On the back of this, Nirmal Bang has cut estimates for FY24 and FY25 by 37 and 34% respectively in their estimates because of reduced EBITDA across geographies. They have downgraded the stock to a sell because of the pricing pressure that the company is talking about.
Okay, all right. Thanks a lot for that, Sonal. Well, I'm talking about Coal India. I already told you that the numbers were very, very good. I'm getting you two brokerage notes. One is on Jefferies. They have upgraded the stock to buy. The target price is at around 385 rupees according to them. They have factored in 7% dividend yield as well. They have upgraded the EPS estimates by 18 to 42% odd, and they are saying that the stock at around 6.5 times PE is reasonable. They recall that in the past, between 2013 to 2018, in fact, it traded even in double-digit PE. So we'll have to see how that goes. The volume growth trajectory has improved, and they're saying that it's likely to sustain as well. In terms of the volume guidance that they're looking at, well, they've raised it by, they estimate 4 to 5%. They're factoring in a 7% volume CAGR over the next few years. So volumes, they're bullish, and they say negatives like the wage price hike and the lower e-auction, prices, that's already factored in, and that's the effects are already been seen. CLSA, they have downgraded the stock from buy to outperform following the recent rally. Though they've increased their target price, they've also increased the EPS estimates. They say that volume growth, yes, it's likely to be high, but they believe that the best of pricing in the near term is behind us. So on the back of that, CLSA as well as Jefferies, both of them have their opinion on Coal India.
All right, so that's about CLSA and Jefferies on Coal India. Meanwhile, we are, a few seconds away from the market opening. The pre-open rates have now settled. It's a mild downtick at the open, about 40 points on the Nifty, 101 points on the sensex itself. The mid-cap likely to see a slightly lesser cut at around 0.12% itself. What are the stocks which are doing well? On the way up, we have Eicher Motors, which is up around 0.5%. Coal India, Nigel's been pointing out the numbers were good, so that stock up as well. On the way down, though, some profit taking seen on, or rather some further weakness seen on the IT pack, so Infosys is lower. And we have Biocon, which is lower by about 2% as well. Ekta did tell us that the numbers were largely flat. So 10 seconds to go. Looks like it will be a slight downtick at the open after a big 100-point up move that we saw on the Muhurat, in the Muhurat session itself. There you have it, Prashant, the first bet.
Well, I think it's looking pretty, it's just a slower kind of a start as expected. And you've got the Nifty, which is starting down about, a third of 1% or so. And you've got the sensex, which is down about a third of 1% as well. Mid-cap index is down about, actually everything is down a third. The bank Nifty is down about 0.3% as well. So that's the picture in terms of the large cap indices. I'll get back to mid caps, etc. But Nigel, you want to take us through the bigger ones?
Well, yeah, that's right. Let's focus on a few names and then stocks that are moving around here. Biocon, well, that one's pulled back in today's trading session. So that one should come up for you on the screen. You have SAIL as well. That's pulled back a little bit. Those numbers, actually adjusted numbers weren't very, very good. But yesterday the stock was more or less flattish to a mild positive take. So that's one stock you should look at. Biocon, Glenmark Pharma and SAIL, all of them have opened up in the red. You have REC, the big outperformer of 2023. Well, that's pulled back a little bit. What's doing well? Well, a few stocks that deserve special mention. You have BHEL. The stock has moved up a little bit, not too much though. A few more notable movers today. Mopin Labs, well, that's down close to 2.5%. Volumes are rather higher on that one. A couple of other notable stocks. You have Orient Green Power. Well, that one as well is up close to around 2.5% odd. And Marksans Pharma, in this month itself, that stock is up close to around 30%. I remember in the past, there has been hope on the stock. And then, in fact, delivery has been short. But last couple of days, it's been doing well. I think post its earnings, the street seems to be a little bit excited on Marksans Pharma as well. So that stock trading in the green. Nifty, though, down close to around 65 points. May not be such a bad thing. Maybe if it moves to around that 19,460 odd level, maybe in fact, which it is at, we'll have to see how risk reward favors them. The Nifty Financial Services Index, though, that's the one that plays out expiry. So that's going to be the swing factor for the second half of trade.
Well, talk about a bunch of big movers, Nigel. We have Eicher Motors thumping away in the morning, the top Nifty gainer, up almost 3% now, and adding on to those gains on account of strong numbers coming in. The other one that's actually lower right now is Glenmark, top F&O loser post numbers. So second place to Biocon itself. Both Biocon and Glenmark Pharma are not doing too well. On the way up, however, Sun TV has picked up some pace. It was higher in the Muhurat session as well, and now up around 0.5% odd as well. Aurobindo Pharma is the other one in the pharmaceutical pack, which is adding on to some of the gains. We're seeing decent gains come by for names like Alchem and others as well. All Cargo Logistics reported their numbers too. That's the other stock which is higher. And, the one that really stands out on the way down right now is Anup Engineering, a small name, but was up 8% in Friday's trading session and also saw a decent move, follow-through move in the Muhurat session. So now it is seeing some bit of profit-taking or pullback. By and large, in the broader markets, we have two stocks declining for every stock which is advancing. The advance decline ratio firmly in favor of decliners. But the question again, in low volumes, do we see a pullback or not?
Well, we'll see. But for now, it's back under 19,500. Yesterday, basically the gains yesterday being given back with what we have right now. almost. Just a few other names before we bring in our market master of the day. Biocon, it's got decent-sized volumes for this point in the day, as Mangalam and Nigel were mentioning. 3% lower. SAIL is down about 1.5%. It's got large volumes. Sonal was talking to us about Tata Chemicals. Tata Chemicals starts about 1.5% down. There is Car Trade. Car Trade was up about 20-25% last week. That starts this week with about a 2.5% cut. Quest Corp saw a very large move on Friday. Quest Corp is down about 1.5%. JSW Infra, the newly listed ports company, that is down about 1.5%. Kaplan Point is down about 1.8%. There is Medanta. I think Medanta saw a move, a decent-sized move yesterday, and that is down about 3%. So these are just pullbacks and those kind of moves which we're seeing. Texmo Pipes is another one which is down about 5% or so. You go down the list and volumes start to become pretty thinned out. The other big capital markets play which has done phenomenally well is CDSL. CDSL is the top volume-led gainer today, 2% at about 1873. And Aurobindo Pharma, Marksons, some of these we've of course already mentioned. Inox Wind is up about 1.6%. So we'll come back to some of this stuff. SBFC, that is Small Business Finance, that is up about 1.5%. Again, recently listed. Stock had a decent sort of move and then it did come off quite sharply. So with just a couple of minutes behind, we're down about 70 odd points or so in terms of the market action. Saurabh Mukherjee is with us, founder at Marcellus Investment Managers. He's a market master of the day. Saurabh, good morning. Great to have you with us here. Happy Diwali. And greetings of the festive season from all of us here at CNBC-TV18 to you, your team at Marcellus. How are things looking, Saurabh, from an overall kind of market structure point of view? The consensus kind of bet which many are making is twofold. One, large caps are better placed than small and mid caps. Two, financials which have are the place to be. It's almost like a no-brainer. Do you agree with those two statements, that point of view? Go on. Saurabh, can you hear me?
I can hear you now, Prashant.
Okay, I'll repeat. Let me first wish you a very happy Diwali, Saurabh, and greetings of the festive season. I began with that, so it's good to see you this morning. I was asking you, the consensus in market seems to be twofold. One, that large caps will do better than mid and small caps, and second, financials are the place to be. They're a no-brainer. Do you agree with both those?
I think let me start with the piece on large caps. I would love to say that if I look at, say, consistent compound risk portfolio, which is primarily large cap, I'd love to say they'll do really well. But the thing is, if you look at the setup in the market, the export-centric small caps, companies whose products tend to get sold in the Western world, or companies that are competing with Chinese export, those companies have been beaten up quite badly in the small cap space. So I would say large caps will do well relative to small caps, subject to the caveat, where I think that as the global economy recovers over the next couple of years, companies in IT services, companies in specialty chemicals, pharmaceuticals, which have strong export franchises, I think will see the comeback through 2024-25. That apart, I agree with the core point that we've had a 3-4 year period, 3-year period in India, where, say, just to take an extreme example, an HDFC Bank is compounding earnings at 20-25% year after year, and I think it's barely given any returns over a 3-year period. Similarly, say a Kotak Bank, similarly an Asian Paints, and therefore the point that high-quality large caps are extremely tastily, extremely juicily priced. I would agree with that core point.
All right. Hi, Saurabh. Good morning and good to see you. And in the past as well, you have expressed your view or, a couple of these large cap names. But what's the change you'll have made in the portfolio from the last time we chatted? I recall we spoke about Vijaya Diagnostics. I think you doubled your position in Dr. Lal a few months or so ago. And I think the new addition was Prudent Corporate. Anything post that you'd like to apprise us on, maybe in terms of an addition or maybe a deletion as well?
So let's start with the small cap changes. So now Little Champs portfolio, we've sold Amrutanjan. We sold Amrutanjan through the last 6 or 7 weeks. And what we've added is 3 stocks. We've added RHI Magnesita. I think I spoke about RHI Magnesita a couple of months ago on your channel. And then more recently, we've added a company called PDS. So PDS helps Western retailers, say a Walmart or a Matalan or a Primark. It helps these companies buy apparel from Asia, specifically from Bangladesh. Companies partly based out of London and partly based out of Mumbai. It's been listed for a decade or so, but over the last 3 to 4 years, as China has faded away as a source for high quality Western apparel, PDS with its network in Bangladesh has really come to the fore. So we've added that to Little Champs. In Little Champs, we've also added Serra Sanitary Ware. This is a company we used to own 4 or 5 years ago. Then we sold it. I guess we shouldn't have sold it 5 years ago. When we sold it, we shouldn't have sold it. Company continues to do well, as the name suggests. It's number 2 in sanitary ware in India. I think they've made tremendous strides in their working capital cycle over the last 5 years. I think working capital has shrunk from 110 days to 70 days. It's always been a well-run company. Vikram Somani and family have run it well for many, many decades. But I think startling improvements in efficiency and working capital cycle. And as we get into the more advanced stage of the real estate cycle, we would like to make money rather than buying real estate developers, make money through late cycle plays like Serra Sanitary Ware. So that's the small cap additions. In large caps, in our large and mid cap portfolios and consistent compounders and rising giants, we've also added Trent. We built that position over the last 10 weeks or so. Results have been tremendous, but what's really led us to buying Trent over the last couple of months is the fact that not only has Zudio turned around, we reckon Star Bazaar is also becoming profitable. And all credit to Noel Tata and team. West Side was a known profitable proposition, but to turn Zudio into a high growth engine and now turning their grocery format profitable, a lot of credit to these guys. And we're hoping that trend compounds for us, much like Titan has done over the last 5-6 years for Marcellus' clients.
Well, sort of interesting picks out there that you've taken. In fact, interestingly, we did speak to the management of PDS just last week, and they indicated that they would eye that 5% net profit mark as well, net profit margin mark as well, as they do sourcing as a service. That was an interesting insight that we got into their business. But speaking about Trent, PDS, these enablers of retail, what are your thoughts on V-Mart? That has been your portfolio stock. Second quarter wasn't as good for them. And the management did say that the wedding season hasn't started as well as they would have liked to. This at a time when you're adding other value retailers, Trent versus V-Mart, does it tempt you to perhaps take some off the table on V-Mart or maybe double down given the weakness?
So look, V-Mart's been in the portfolio for the last 4 years or so. And clearly, as they've come out of COVID, the business has come out of COVID weaker. V-Mart's business has come out of COVID weaker than it went in. I think there's sort of three-pronged challenges here for V-Mart. Part of it is well-run firms like Trent have made a real impact in the value fashion space. By value fashion, I mean the price point around 400, 500, 600 rupees. Firms like V-Mart and even D-Mart really used to have this space to unto themselves. Trent has really made an impact here, as has Reliance Trends. And in addition, I think what they've been impacted by is the online play. The online play has become far more powerful post-COVID. So I think Lalit Agarwal and management are aware of these challenges. They're trying their best to deal with them. I think the last 6 months have seen some signs that they're being able to come to terms with the problem. They've hired some people from other retailers. They've revamped their lineup. I visited their stores, both Eastern and Western India. The V-Mart stores seem refreshed. And we are hoping through the festive season, through the wedding season, we're hoping that V-Mart can get some of the zing back into its franchise. But I agree with you that this was a franchise and we bought it 4 years ago. We had a good couple of years with it, but it's come out of COVID weaker than it went in. And ironically, Trend's success is in part at V-Mart's expense.
Would it then make sense for you to go the relaxo way on V-Mart as well? Maybe bite the bullet and perhaps look at another opportunities?
So in small cap investing, one learns to be patient. If we sold every small cap and they've had a few rough quarters, then I wouldn't be sitting here. In small cap investing, you learn to realize that companies go through their ups and downs. I'll give you an example, a company that we don't own, but I think a company that's done extremely well over the last couple of years after 9 or 10 years of working very hard. It's LG Equipment. I think I've known LG Equipment for more than a decade. They make air compressors. They put the hard yards in for 8, 9, 10 years. And in the last 2 to 3 years, as in the post-COVID world, They've really come of age as a high-class franchise. So the nature of small cap investing is such you have to understand companies, understand that management teams take a while to fix issues, and persevere with them whilst we go through that.
Okay, I got that. Saurabh, let me just ask you about the financials space, right? What are your thoughts? What's the best thing to own there? HDFC Bank everyone likes as a stock, but it's a very large book, right? 25 lakh crores. Is that? Are there better things to own there? What's the sense?
I think there's two really attractive pockets in financials, and I think there's one area of danger in financials. Just quickly, the area of danger is unsecured retail. We've sort of written a note about it. 10,000, 20,000, 30,000 rupee loans. We think the alarm bells are ringing here. There's significant signs that NPAs and delinquencies are picking up in this space. Thankfully, HDFC Bank, just to take an example, has throttled off on this. So has Bajaj Finance. By the way, all the stocks I'm mentioning are part of my portfolio, my parents' portfolio in Marcellus, and our 10,000 clients' portfolio. So Bajaj Finance and HDFC Bank have throttled off on unsecured small ticket retail lending, but I think there are other lenders out there badly exposed to this, and I think there's a challenge coming here. I think the parts of lending which will do really, really well in the next couple of years is, firstly, I think home loans. I think we're in a stage of the economic cycle in India where even with rates at peak, we're seeing very strong demand for home loans. Over the next couple of years, as interest rates come off, I think home loan demand will pick up. And in that regard, say HDFC Bank's acquisition of the HDFC Limited book, I think will bear fruit. And that's why we're very happy shareholders of HDFC Bank through this whole merger period. Similarly, say Bajaj Finance, which has built a big mortgage book over the last 5 years, I think they too will benefit. I think mortgages, this whole entire middle class India buying their homes, whether we play through the mortgage lenders or we play through the construction material companies. I think there's plenty of money to be made there. And the other area is corporate lending. Corporate India's balance sheet is the least geared it's been in 20 years. And I think as we get into the reduction in the rate cycle and a global economic recovery over the next 2 to 3 years, you'll see a real boom in corporate lending.
All right, Saurabh, always a pleasure listening to you. Thank you so much for joining in. Once again, season's greetings to you as well and your team. With that, let's shift our focus towards Biocon. Among the top F&O losers today, the company recently reported largely below estimate numbers in the second quarter. We caught up with their group CEO, Peter Baines. He spoke about the business outlook and also the performance of biosimilars itself. Let's hear him out.
We're very pleased with the progress we're making with the transition of the Viatris business. And in the quarter, we completed the transition in the United States, obviously a very major market. And we're on track to complete the transition in Europe and the remaining emerging markets before the end of this fiscal. So making very good progress there. And delighted, I think, to see the traction that we're getting with the major brands, both in the United States and in Europe. So, for example, with Fulphila, which is biologics pegfilgrastim, we saw market share increase from 11% to 19%, with trastuzumab from 10% to 12%, and with the Semglee glargine from 9% to 11%. So that demonstrates the real power and strength of the commercial engine in the United States. And in Europe, we saw a similar pattern with market share improvements across the portfolio of assets, which augurs well for Europe for the future. And of course, that was supported by growth in the emerging markets, particularly in the insulins. So we're very pleased with the progress we're making. We still got work to do, particularly in Europe, which is more complex, but we're on track to complete the transition before the end of the year. The reason for that is just really tightening the focus of our business around our core therapy areas. So nephrology and dermatology were non-core, so we're going to focus on our core areas. And the use of funds, will largely be to offset the debt that we have. We're looking at a number of options there. So, we have already taken down the debt at some level through structured equity. That remains an option, but there are a number of other levers that we're looking at as well. And we'll be working through that, I think, and reducing the debt level that we have over the coming quarters.
All right, from one pharmaceutical company, let's go on to another healthcare diagnostics company. Fortis Healthcare reported a steady set of numbers in the second quarter. Revenue saw a growth of about 10%. Hospital revenue aided by improvement in the average revenue per operating bed, but margins came in flat on a year-on-year basis. We do have Ashutosh Raghuvanshi, who's the Managing Director and the CEO at Fortis Healthcare, joining in. Ashutosh, thank you for joining in, and season's greetings to you and your team. Just wanted to know about a couple of details for your second half. What kind of occupancies and average revenue per occupied bed are you factoring in for the second half of this year? 70% plus for both these factors?
See, we have seen a very steady growth in the average realization per occupied bed over the last about 6 to 7 quarters. And I think that trend should continue. And that is primarily coming because of the complexity of cases is increasing, and the kind of patient mix and case mix we are having, that is resulting into that. As far as occupancy is concerned, we expect it to be somewhere upwards of 70%, which would be slightly higher than the H1.
And average revenue per occupied bed, where would it be in the second half? How much higher would it be?
See, the growth rate of ARPOB has been pretty high, and I don't think it will remain at the same magnitude, but we expect at least 8 to 10% increase in that.
Got it. Hi, good morning, Mr. Raghuvanshi, and always good to see you in. Wishing you and your team a very, very happy Diwali. Well, in terms of your numbers, let's slice it a little bit more. The surgical revenue, I think that's at around 61% of sales. So give us a few more details. High-end surgeries, how much do they contribute, and where is that number headed? If you could give us a bit of a guidance out there. And international patient revenue as well has moved up. What's the guidance out here, and where do you see this number move to?
So the complexity of cases has been increasing. As I said, that, our portfolio is such that we do tertiary, quaternary kind of care. So that kind of cases, majority of the surgical revenue comes from complex work itself. Neurosurgery is a big part of our portfolio. Other than that, we have a lot of orthopedic, joint replacement, robotic surgeries, etc. So that trend would remain as such. And as far as international business is concerned, that has grown significantly, but it has been slightly below our expectation. We expect to see a better growth because we are going for several measures like direct sell into different international markets, etc. So we expect that to increase marginally during this half, but I think in the subsequent years, we should see a much better growth on the international as well.
How much will it contribute as a percentage of your mix?
As a percentage, we have still come back only to the pre-COVID levels, which is approximately 10% of our revenue from the international. And we expect that to remain more or less in percentage terms at the same level, but in absolute terms, it would grow. The reason for that is because our base of domestic patients is continuously increasing at a fast pace.
Okay, all right, no, fair enough. A lot of hospital chains are focused on their international patient segment, so we'll sort of keep coming back to you for more information. Ms. Raghuvanshi, good morning. Prashant here. If you can talk to us a little bit about the diagnostics business. I think here growth perhaps is lagging, players like Dr. Lal's, etc. by some bit. Could you explain what was the operating environment like in terms of competition, etc., discounting? Dr. Lal, by the way, was with us, I think, the week before last, and they were telling us that, competition is still there, but it is not price-based anymore. That worst of discounting, etc., is behind. Do you sense that as well? And for Fortis's diagnostic business, what were margins this quarter, and what's the guidance?
Prashant, as you must be aware that our subsidiary, Agilus Diagnostics, has filed for an IPO. So I'm sorry, but I will not be able to answer any specific forward-looking questions. The general environment of diagnostic is concerned, it definitely is settling down and is becoming much better than the challenges of past.
Okay, so can you tell us the IPO? I mean, can you talk to us a little bit about the IPO itself, or no? That's off bounds for now.
Yeah, no, sorry, I don't think so. I would be able to speak about that.
Okay.
All right, that'll be interesting. But, just your thoughts on, not specific, by when do you think, the street should look at the listing or the offer?
We have filed in the month of September, and depending on all the clearances, we will keep you posted as it develops.
Will it be a fresh issue or just an offer for sale? Just wanted to understand that. Or a mix of both?
It is primarily an offer for sale.
Let's focus on the business then, because you're not giving us too much with regard to that IPO, and we'll wait by for further details on that front. But tell us, are you looking at divesting any of the non-core assets or a couple of parts of your business that you're looking to divest, or are you done with that?
No, see, as you must be aware, that we have already divested one of our facilities in Chennai. We continue to sort of review our portfolio and see the focus geographies where we have good presence. And some of the facilities we are in the process of evaluating whether they are enough, they're important enough for us in the larger scheme of things. And we would possibly be looking at one or two more areas as well.
So we can hear about them in the coming quarter, second half of the year?
Absolutely.
Okay, and final question from my end then. What's the status on the open offer from IHH? We have not heard about an update out there. If you could tell us, where is it at now, and when do things get resolved?
So the legal hearings are still, legal matters are pending, and in the Delhi High Court. So we expect some clarity to come from there, and that would determine the approach. As far as MTO is concerned, that is an IHH matter. But what I'm aware of is that as and when at the earliest we can get the necessary clearances, we will go ahead with it.
You said you are looking at rationalizing one or two more areas, or looking at unlocking value out there, or divesting those businesses. Could you give us a sense of what geographies and what hospitals you're talking about?
So we have a cluster strategy. So the clusters we are focusing on is Punjab, NCR, Western around Mumbai, Kolkata, and Bangalore. We are looking at Chennai asset as a potential asset for divestment.
All right. So after having divested the Arcot Road facility, you are looking at another asset for divestment out there as well. Take that point. Thanks a lot, Mr. Raghuvanshi, for joining in and giving us a detailed outlook on your business, as much as you could have given us. With that, we'll step into a short break, and on the other side, we get chatting with the management of Rail Vikas Nigam. A big mover, Pradeep Gaur, joins in to discuss their second quarter earnings. Later. We will also connect with Muthaiya Murugappan of EID Perry for their second quarter performance. Stay tuned for that too.
Welcome back. It looks like on the markets, if yesterday only the bulls showed up, today the bears are showing up. Low volumes yet again, but for the time being, the Nifty is down close to around 80 points odd. Good time to welcome management and that of RVNL. Remember, in the past 1 year or so, the stock has done very, very well with that rail theme. The question is, how does the year pan out and what's the way ahead from here on? Mr. Pradeep Gaur, the chairman and managing director of the company, joins us on the show. Good morning, Mr. Gaur, and first of all, a happy Diwali to you, your family, and your entire team at RVNL. Well, getting to the numbers, in the first half of the year, you'll have done close to around 10% growth, which is something that you were guiding for as well. But you also mentioned that maybe the growth on the profitability will be far better. So at the halfway mark, could you tell us for the year, what are you likely to grow by, both on the top line and more importantly, on the operating profit and PAT front? Can you do 10% or more even there?
Good morning and thank you for your warm Diwali wishes and my wishes to you and each and everyone in CNBC. So as far as half-yearly results are concerned, we have, as you rightly mentioned, we have grown by around 10%. And while our profits have increased by almost 20-21%. And this trend will continue, and we are very confident that in a balanced 6 months, the bottom line will improve even further because more and more portfolio is now coming from the projects which we have taken on bidding, where the margins will be better than what we have in the projects which were taken on assignment from Ministry of Railways. So I'm very confident about it, and things will move, because the margins will be better in that compared to the other projects.
Okay, so top line growth of a little more than 10% or more, and operating profit and profitability for the year will grow by more than 10%, right, sir?
Yeah.
Did we get that correct for FY24?
Yeah, as far as turnover is concerned, see, we are under a transition now, because the projects what we had taken on assignment from Ministry of Railways, their volume is coming down, while the projects what we have taken on bidding will grow up. So this is some sort of tapering down of one and rising of other. So as far as what I can be assured, what I can be absolutely sure of is the bottom line. Top line also will try to maintain, but as you can appreciate, there is a bit of transition here. So that has to be accounted for.
Okay, so we will wait by for stability to come by as you are currently in the transition period. Just a couple of more details. As far as your bidding portfolio is concerned, what's the kind of order inflows that you expect in the second half of this year? You have an order backlog of nearly 67,000 odd crores. And, international orders, that is likely to be a big catalyst for you. How much is that as a proportion of your overall mix right now? How much will that be going forward, say, 12 to 18 months from here?
Yes. So as far as order book is concerned, as you rightly mentioned, it is around 67,000 crores, which is almost 50-50 mix of both projects what are on assignment from railways and what we have taken on bidding. So our strike rate of whatever we have projects we have been bidding has been around 35 to 40%. So our aim is to take this order book to at least 1 lakh crore by the end of the year. So that is our plan. And as far as projects abroad is concerned, presently we are working only in Maldives, where we are successfully executing a very strategically important project of Government of India. But we are going in a big way as far as foreign projects are concerned. We have now established offices in Middle East, that is in Oman and UAE, and we have now established one office in South Africa. So these are the two focus areas, the Middle East and Africa. That is what we are aiming at, and I can assure you that in very near future you will be dealing with many projects in both the cases, because we have already done bidding for one major project in Saudi Arabia, and we have given expression of interest in Oman as also in South Africa. So, and since we want to have a a sort of permanent foothold there. So we have decided to establish our offices, and our offices are already established there. So a lot of portfolio expansion on foreign projects in these two areas is our focus. In addition to Southeast Asia, Vietnam, that is another area of focus.
Mr. Gaur, how much of your overall portfolio will then be from international business is what I'm trying to get at. I mean, yes, there are a lot of countries, but as an overall part of your portfolio, how much will come from international according to you?
We are looking at to gradually raise it at least up to 40 to 50% of the total. Okay. That is the way we have done the planning of our things. So we are quite aggressive about it. And one area which I forgot, just missed out, was even in Kyrgyzstan. There also we are in final stage. So you will see a lot of expansion of our projects portfolio abroad. And it will be a fair mix, around 40 to 50% in very near
40-50% of revenues?
Yes.
Okay.
No,
right.
I will not say revenue, our total portfolio.
Okay, so that would be order book?
Yes, order book.
Okay, got it. Mr. Gaur, since you mentioned Kyrgyzstan, that's going to be a very, very important, and it's a multi-billion-dollar order as well, right? Opportunity. So give us some timelines first. By when do you get clarity on this? And since it's going to be a multi-billion-dollar opportunity, how does the funding shape up from here?
Yes,
only for this order, sir.
Yeah, I entirely agree. This is actually slightly late than what we had expected. So the sort of financial closure and final approvals of government is, that is in this stage. And last week also we had a detailed discussion with them, and we are in constant touch with them. Actually, it should have happened by now, but sometimes processes, because this is for the first time they are going for this model in a big way. So always there are more discussions than this thing. So once this is in place, I think next projects will be faster. So still I'm expecting it should be a matter of 1 or 2 months. That is the indication I'm getting.
So, Mr. Gaur, when you join us here on CNBC-TV18 at the end of the third quarter, you will have clarity on that. It's likely to be signed out?
Absolutely. That is what I'm hoping.
And what about funding? Since it's going to be a multi-billion-dollar project, how does that shape up? I mean, what kind of a plan do you all have in mind?
Yeah, as far as funding is concerned, the funding is entirely by government of Kyrgyzstan. They have entered into financial arrangement with the funds. Which I would like, I may not state now, because unless it is totally finalized. So as far as funding is concerned, RVNL is only for the execution, and the funding is being taken care of by government of Kyrgyzstan.
Speaking about the government, it's they did an OFS in July itself at around 119 rupees per share. Since then, the stock has moved higher, closer to around 160 rupees odd. Do you think the government would be tempted to perhaps come out with another value unlocking measure in their holding here? Or would they hold on and maybe next year, where all these triggers that you're talking about come by, we'll see another OFS? Your thoughts here?
Yeah, as far as the present disinvestment, whatever has taken place is a part of the minimum shareholding of the government. So next, what government will do? Yes, it is not right for me to speculate on that. But I can only say that whatever market, the capitalization or whatever the market has taken, it is a manifestation of confidence of market on us. The way within a very short period, we have been able to transition ourselves and have been able to take a lot of projects. And not only taking a lot of projects, we have successfully executed in a very challenging manner. I can share 2 projects for your for the benefit of your viewers. One is in Indore Metro. Within one and a half year, we have been able to hand over 6 kilometers of track where trial has been done. So this has been, based on the record, it is the fastest done ever in India. Similarly, the Maldives project has taken off very well, and we have completed almost 10 hectares of dredging in a period of just 4.5 months. It was a very challenging project. as far as project execution and this thing is concerned, that is the main strength of Arminal. And
got it, sir. Got it. We are just running out of time, so we will have you back again, sir. Thank you very much for joining us. Great speaking with you, and once again wishing you a very happy Diwali and season's greetings, sir. Thank you. Well, we've got the market, which I think is down exactly where we started, 70 odd points lower. But we've got the next management ready with us. EID Parry is the company in focus, part of the Murugappa group. Revenues for EID Parry jumped 12%. Gross margin contraction led to some EBITDA losses. In fact, the sugar business reported losses due to export release order restrictions imposed by the government. We've got the management joining us to take us through some of this. Mr. Muthaiya Murugappan is a whole-time director and chief executive officer at EID Parry. So thanks for joining us. Season's greetings. Happy Diwali to you, to your family, to your team at EID. Prashant this side. I just want to start by asking you, sir, what is the outlook for the refinery segment? It has posted losses for the last couple of years. How did it do in the quarter? And what is the outlook? Do you think we can see a complete turnaround? Because I think what was hurting that segment was high fuel costs. Is that starting to change now?
So Prashant, very good morning and season's greetings to all of you at CNBC-TV18 and all your viewers as well. Hope you all had a very good Diwali celebration. The refinery segment, yes, we have had some challenges. I mean, the refinery was set up, in a multinational partnership more than a decade ago. The partner and us parted ways. And ever since, it's been quite a challenging environment. Spreads have narrowed. In the recent years, we have had some operational issues, and that has plagued the balance sheet. This quarter, however, was a better quarter. We had some good spreads and good volumes as well, so we were able to pick up the pace a little bit. But we still have a lot of work to do on this business. We need some partnerships to be put in place, which we're working on, especially on the trade desk side. So that is work in progress. And we already hope to put the business on a strategic path, on a better strategic path going forward.
Could you give us some numbers, sir? What could this, will it turn profitable on a steady basis a year from now? Just some numbers would help. And what's the capacity? Yeah.
So we've had a reasonable Q2, and I think we should have a steadier year this year compared to last year. Last year, of course, we had some operational issues. We don't give guidance and talk about specific numbers from a forward-looking perspective, so I will refrain from that. But we should have a steadier year this year than we did in the previous year.
And what's the capacity, sir?
It's 2 million tons.
2 million tons? 2 million tons a year?
Yeah.
Okay. All right.
Okay.
All right. Hi. Good morning, Mr. Murugappan, and Nigel on this side. Season's greetings to you as well as your entire team out there. Your distillery segment, I think the last time we chatted, we were talking about, I think, in the past year, you sold something like around 10 crore liters odd, but you were adding capacity out there. And for this year, sales were expected, I think, to be around 14 crore liters, if I remember that number correctly. And revenues as well had to move up. Last year, I think you did around 650 crores. So what's the number we're looking at on both these two segments? That's in terms of volumes as well as in terms of sales value?
The distillery segment, Nigel, we will grow 30%. We have added some capacity which has come on stream.
Yes.
There's two other capacity expansion projects in the mix, but one of them will only come on stream towards the end of FY24 and one in Q1 of FY25. We will grow 30% both on revenue as well as volume this year.
Okay, all right. So if I just plug in those numbers, you'll end this year with at close to around 13 crore sales in terms of volumes, and the revenue number should be in that vicinity of around 900 crores. Are we getting it correct?
Reasonably accurate, slightly north of that in terms of volume, yeah.
All right, closer to 14 crore liters is what you're looking at. The capacity you said is increasing from 475 KLPD to I think around 600 KLPD here. What then would be the entire business's revenue potential when the whole capacity comes on stream? And once the capacity ramps up, you would see some operating leverage benefits as well, right? So what could a steady state EBITDA for your distillery business look like at full capacity, and what exactly is that full capacity?
So once we're running at the full capacity rate, Mangalam, we'd be at about 1,200, 1,250 crores. The EBITDAs are also moving up. I think as we are getting the benefit of scale and understanding how to more efficiently run this segment, the EBITDAs are moving up. We were hovering around the 10% mark in FY23, and those EBITDAs have moved up in H1, and I think will continue to move up. I think what we'd be happy with as a company would be EBITDAs in the range of about 20% or just about 20% when we are at steady state once this capacities come on stream. So, sort of halfway through FY25 or 3 quarters into FY25, we'd be happy with these EBITDA percentages.
Just 2 more questions from my side, sir. One is on the branded sugar side. I think you had plans to increase that substantially. Could you tell us where that is? Where do you plan to take it to? And what will that do to average realizations once you achieve that scale?
So Prashant, on the branded sugar side, we are currently at about 30% of our sales volume comes from branded, and this will certainly move up over time. We're focused on building distribution. We do get a premium in this segment, premium of about 1.5 to 2 rupees per kilo. I think as we build distribution, the intent is to, and we have about 8 to 9 sweetener products right now, which are in the market, largely southern markets in retail. The intent is to expand the product line. The Paris brand is a strong brand. And I think we are looking to a broader share of the kitchen shelf as we move forward.
Okay.
Just one last question from my side, sir. On the nutraceuticals business, could you tell us what's the future? What are the plans?
So nutraceutical, again, I think when we spoke a couple of quarters ago, just like refinery, we need to put it on a better strategic path. Prashant, the business is under strategic review. And we are exploring various partnerships and options to put the business on a better track. We haven't seen much growth, and we are quite subscale in that segment. So we're working out how best to put on a better strategic path. So when we have up, we will.
But it'll be part of EID. I mean, you will grow it with partnerships, etc. Or is it possible that you spin it out or sell it?
So I think the various strategic options are under evaluation and discussion. So I couldn't comment on anything specifically at this point in time.
And what about Coromandel stake? Any possibility that you look to divest a little bit more stake? Your shareholders will believe that's the real sweetener.
Nigel, no such discussion. I know we spoke about this last time as well. No such discussion.
Indeed. I just was wondering whether there was any kind of change of heart or change of thought, but thanks for clarifying that. So not looking to pay down debt. Well, it's always a pleasure talking to you, sir, and thanks so much for joining in. We look forward to having a chat with you sometime during this quarter or maybe at the end of Q3. Wishing you a good day ahead and a good festive season as well.
Thank you, and thank you for having me.
For the time being, though, let's slip into a short break. You come back, it seems the bulls are waking up now because the markets have recovered from the low point of the day. Stay with us.
Okay, welcome back. 55 points lower on the Nifty is what we have. Banks are down about 0.25%. The banks index, that is. Just one name I want to highlight. Delhi Bilcon on the upside is jumping a little bit, 6-7% higher, and it's got decent sized volumes right now. $400 on Delhi Bilcon. There are the usual suspects like the Bombay Stock Exchange. BSE was up about 5%. I think yesterday it's up another 3.5%. So in the grip of very strong momentum, BSE. And we were talking about this with Mitesh earlier on as well. Mitesh actually is back with us with a quick check on things and what he'd like you to do. Mitesh, morning again. What's the reading of the screen and fresh advice?
Morning, Prashant. I think the good thing is that the Nifty managed to hold the support area of 19,450. Though the intraday low was about 8, 9, 10 points lower than that. But I think on an hourly closing basis, we are in good space. So I think if somebody wants to buy, this could be a good entry point with a 40-point kind of a stop loss on the Nifty spot. And if 1950 does not break, then there is a good chance that we will head towards yesterday's high, which was around 19,550, and then eventually even look for higher targets. So I'll approach the markets with a long bias. I have 2 buy calls right now. Hindustan Copper, I think the stock has been running and it's moved up in the last few minutes as well. But buy here, and in case you get a mild decline around 155, add there. And keep a stop below 150 here. I'm looking at a target of around 166 to about 170. Disclaimer, we have recommended this to our clients, so there's vested interest. And the other one is Sun TV. I think a good reaction post the numbers. The stock has given a good breakout. That's a buy with a stop below levels of 656 and a target of 695 is what I recommend.
Right, good reaction on Sun TV. That stock's moved to the high point of trade. And interesting you pulled up Hindustan Copper, because I was just looking at the metals index, Mitesh, and it's the metals index which has led the market higher from the lows right now. So we have Hindalco, which is doing well, JSW Steel, all the metal stocks looking up. Prashant alluded to that big meeting between President Biden and Xi Jinping somewhere in the middle of the week. So maybe the street is looking at metals to play the sentiments out there as well. And with interest rates being near peak and dollar index stabilizing, that's one place that everyone will be eyeing too. But talking about some big gainers, we have Eicher Motors, which is the top Nifty gainer this morning. Good numbers coming in. Sonal joins in to apprise us more on that. Sonal.
Thank you for that. Well, yes, good numbers coming in from Eicher Motors. It was a beat on all parameters. If you look at the revenues, it was up 17%. EBITDA has gone up by 32% as well. And margins, they have expanded by 320 basis points on a YY basis. And profit growth has been very strong. This time around at 55% to come in at 1,016 crore rupees. Now, the domestic market share, motorcycle market share has risen to 8.2% in first half of FY24 versus levels of 7.8% in FY23. This is share of 250cc and above. Even they are gaining market share in the 125cc segment, and that is something which is a positive indicator of fundamentals as well. Royal Enfield share of more than 125cc bikes has risen to 32% in the first half of FY24 as well. Brokerages, they are very bullish. Morgan Stanley has an equal weight with the target price of 3,552 rupees a share. They say EBITDA was ahead of estimates, largely driven by gross margin expansion that the company saw in Q2. Jefferies is a buy call with a target price of 4,650 rupees a share. They say second quarter EBITDA and PAT rose 32 to 55% on a YY basis, which is 6 to 9% above what they were estimating. So they have given a thumbs up to numbers as well.
All right, thumbs up to numbers and thumbs up to the broader markets as well. As we move towards a break on Bazaar, we have the mid-cap index, which is all but in the green now. A big recovery is what we've seen from the lows. Maybe after the short break when Lata comes back, she will have the mid-cap index in the green as well. But, it is the special segment. It's the economy. Lata will be discussing the downgrade of the US government bonds by Moody's and its impact on the US and India. She has with her special guests Neeraj Gambhir of Axis Bank and Steve Englander of Standard Chartered. Stay tuned.